Hey everyone, welcome back to my channel. Today I want to talk about 6 levels I've been drawing every morning and how they have impacted my range day trading. This is a very simple exercise that we can do every morning and has helped me improve my ability to trade range days on ES, NQ, SPY, QQQ, SPX, and any other major indices significantly. Before we get started, I'll leave several discount codes for trading services I use in the description, including Sonar Labs, TradeEdX, Voland, and Elite Trader Fund. Lastly, if you enjoy this content, don't forget to like and subscribe to help me grow this channel. Also, be sure to hit the notification bell to get notified whenever I post a new video. With all that being said, let's get right into it. So, the first thing I want to talk about is my morning prep that I post on Twitter, which is helpful. We can see that SPX was very light. There wasn't a lot of dealer participation happening on this day, and that applies to both Gamma and Vanna. Gamma was a bit messier. We can see that we had a mixed bag of positive and negative Gamma, and none of it really exceeded anything over 10 billion, which is actually what we want to see. In this case, it was actually as low as 10 million, so that's very insignificant. The other thing I want to draw attention to, and this is what we commonly see on range days, is a lack of dealer participation and a lot of dark pool levels in a congested area, and we can see that we had exactly that. So on SPY, the dark pool sentiment actually looked bullish, which was deceiving. But more importantly, the dark pool levels in the top left corner here, where there was a lot of dark pool activity, and they were all within this set range that we ended up trading in. Also, with our algo flow divergences, we can see that it was a bit of a mixed bag, which was another indication that it would be a range day. And then let's actually just jump right over to the charts here so we can talk about these levels, which is something we can put on our charts for free and help us significantly. So what I want to point out is this is before the market has opened. We had PCE that morning, and it was just this whipsaw movement between these large order blocks that we have. The red rectangles are bearish order blocks, the blue rectangles are bullish order blocks. For those that are curious, I'm actually using the Sonar Labs SMC indicator. I ended up making my own, but I moved away from it just because the Sonar Labs one is so incredibly good. And they do things like identify liquidity grabs and trendline liquidity and other concepts that I just haven't seen anyone else compete with. So I ended up going back to them because it's just so helpful to have this stuff auto-drawn. But despite that, back to the free stuff, the levels that I have here. Now you can see there's more than 6, but it's actually because there's 2 days worth of levels on my charts here. If we look to the right, you can see how I have them labeled. We have pre-market high, London highs, both from 12:23, so that's this morning, the morning that we're talking about, the trading day we're talking about. Asian highs for 12:23, Asian high for 12:19, London high for 12:19, London lows for 12:23, PM high for 12:19. You get the idea. And where I'm getting these levels from is, if we actually scroll back, is exactly what they're labeled as, the highs and lows of each session. So if we scroll back enough here, you can see I already have lines drawn from the 19th, and that's because we actually ended up trading within the same range as December 19th on this day. And we can see that the Asian low right here for 12:23 was this level right here. Then we could see the Asian high was this level right here. And so the time frame that I'm looking at for this was 8 p.m. So this is 8:08, and then the high happened here at 10:46, and then the Asian session just traded within that range. So I marked those two levels. It's there's no subjectivity here. It's just highs and lows. Then we'd want to do the same for the London session. So we can see I have my London lows marked here, which happened at 4 a.m. London session technically begins at 2 a.m. The volume starts to flood in around 3 a.m. For the Asia session, technically begins earlier than this, but the volume really floods in at 8 p.m. So that's why we want to make sure that we're marking within that time range here. And there's indicators that can show you those sessions. I'm just familiar with the times that they occur in, and I should note that I'm specifically talking on U.S. Eastern Time, New York time. So, of course, make sure you adjust the times that you're looking at based on the time zone you're in. So we have the London highs here. And so I marked this level, and I'm just using the rays here, so you can just draw a ray at the starting point. I left the levels from 12:19 because, one, again, we were in the same range, marking the same highs and lows from Asia and London. And then lastly, I marked the pre-market high and the pre-market low. So the time frame I'm looking for with this is basically from 7 a.m. all the way to the open, which would be 9:30 a.m. We can see PCE created these extreme highs and lows, and then we essentially went back to where we started, which was very interesting because oftentimes we'll see PCE cause a trend day, but in this case it just caused whipsaw movement, meaning that the data that the institutions received didn't really have much of an impact despite that big movement that it first encountered. So now that we have our levels, and again, if you need to reference them, you can see on the right here how they react. If we go ahead and play this session, oh, and one other thing I should mention is that if you do have market net flow, so we can see here, this was the 23rd. This actually was deceiving because we can see puts are in the lead and calls. There's a lot of call selling and what appears to be a lot of put buying, but if you actually look, the cumulative net premiums on puts was right around the 0 line, which is minimal. The call selling was very flat, and unfortunately I can't show you here, but if I go to a current day, so let me just get rid of the date here. One other useful thing to know that we might be trading in a range besides the data that I posted on Twitter is the fact that there was no time frame convergence. So when this icon here is grayed out, it means that the different time frames, the different expirations that we can look at, were out of whack with each other. So there was no consistency across time frames, which is usually indicative of a day that we're going to be staying within a range. Now, if you don't have market net flow, that's fine. This is mostly about how we can use these levels I've marked. And actually, in this case, I'm going to go ahead and hide the order blocks as well, just because I want this to be about the levels that we're working with here. And so if we play this through, we can see as soon as we open, we get a big move up. We hold right at the Asia lows of 1223. And it looks like we're encountering resistance at this level initially at the PM high from 1219 and the London lows from 1223, but we end up breaking through that and we move a bit higher. And then right here is where you can enter your first short of the day because we have this big rejection, very clean off the Asian highs from 1219. And that was moving fast, so I paused it slower than I would have liked. But this is a strong indication of selling here. We have this high volume long wick that makes up about half of the candle. And then right back below this level would have been a great short opportunity. If we let this play out, we can see here that we just end up ripping through these levels. But here's what else is interesting. The pre-market low from 1223, which was the low of the PCE data movement, ends up becoming the low right here. We attempt to break through it a couple times. We fail to do so, even though it looks like it at times that we will. We fail to do so. It's a good indication to get out. And what ends up happening is when we shoot back up, we hold perfectly at the London lows from the same day, London session lows, which also ends up being an order block as well. This candle right here, which I don't have turned on right now, but this is actually a bearish order block because we had a break of structure here. And it's always, instead of using this candle, we want to use the green candle right before it. So we touched a bearish order block and the London lows perfectly rejected off of it. And now we can expect to make our next leg down. And so again, another beautiful short opportunity here that we could have rode down. We meet resistance once again at the PM lows. And then we get one of the normal smart money tactics, which is a liquidity grab where fake breaks lower. This is why one of my rules is to not chase breaks. Sometimes I'm still guilty of it, and I fail in that regard. And every time I do, I get burned and reminded why that's one of my rules. Why I always try to enter up here rather than chasing a breakout down here, especially when we're at the lows of the day, essentially. It's not wise. Now, if we did break down and we retested and we rejected again, that would be a cue to enter. But the fact that when we go to retest it, we get no sign of selling, we start moving back up, and then what ends up happening right here, and this is something I noted in my prep on Twitter, is some 10 a.m. news, which sends us back up. But look again, once again, we reject off those London lows, and this could be a short opportunity if you are okay with playing macroeconomic news. I personally am not. But again, would have been another good short position. We come right back down, and then we start chopping around again. Looks like we're going to break. We end up holding those pre-market lows. And then at this point, now we have a higher low. So now we can actually start looking for a bullish setup. And so we do want to make sure, ideally, that we maybe get another higher low, or we make a higher high. Again, this level is so strong that it's rejecting again. But after this news, we get a big buy up here, and then we start moving higher and we start breaking out. Now, this buy up here would have been a really good long opportunity, especially after it's the second higher low here. And then we finally get a breakthrough with those London lows that have been holding us back. And then we continue moving higher, and we can see that we're struggling at the session highs and lows from days prior. We chop around a bit before we finally break out. Looks like we come back a bit, and then we proceed to move higher. We get some break and retests of these pre-market highs and lows, and so in this case we retested the Asian highs of 1223 before moving higher, and then we basically have a fake break above the London highs, at which point we reject, and upon doing so we end up falling quite a bit below here. So we drop back down, and this is where it gets interesting, because again, all these pre-market levels that we drew are coming into play. We can see that we're attempting to hold here, attempt to break above and fail, move lower, and then essentially so these days are very tricky for most people, because it's a tighter range, but yet we're holding these levels really well. We're consolidating in them, getting indications of a move higher, at which point we can actually just be patient, sit limit orders within wicks, move higher, take longs or shorts based off these levels, or calls or puts based off these levels if you're choosing to trade SPY or SPX. It really doesn't matter. But again, as we proceed to move around here, we end up, I'll go ahead and speed this up because I'm pretty sure you get the idea at this point. But we end up just essentially chopping around in these ranges, which were all basically predetermined by simply, again, no subjectivity, no looking for where we had multiple touches on certain levels, but essentially just drawing highs and lows of the morning sessions. And the thing is, this is from 1223. Well, today, which was 1227, we had a very similar situation. So let me stop this replay and let's go over to here. So again, so this was today, which is Tuesday, 1227. We had our pre-market activity. Just to go back, you can see that we're marking PM high, PM lows. The Asia and London highs were the same. The Asia low from 1227, and then all those levels we marked from the prior sessions from the week prior, we have showing up again here, because once again we fall back into this range. The market's not ready to move out of this range until we get some real volume. It could be after the holidays, it could be from a macro event coming up on potentially Thursday or Friday, whatever it might be. We can see that these levels indeed play a part, and so we don't have to go through this whole thing again, but we can see that as we break down. Now today was interesting because one thing I wanted to point out was if we were looking at SPY's chart, we would see that the bottom ended up being right around a major dark pool print. We had a fake break with a liquidity grab, but in this case, we can see this fake break ended up holding the Asia lows. We can see that we had a nice short that could have been taken here or here off of the Asian highs and London highs from days prior. And as we continue to move up, I mean, even at the open, one thing that allowed me to get in early today was this break of the PM high from 1223. When we broke and retested it perfectly and fell lower, it was an incredible short opportunity that I was able to capture from just simply marking these pre-market levels. And now, of course, it doesn't always hold perfectly, and this is where things like order blocks and fair value gaps and things of that nature can fill in the gap. This is actually a fair value gap right here. It's not marking it for some reason, but this long candle body that was just extreme buyer side was a fair value gap, which ended up holding on this candle here. But despite that, if we add in the smart money concepts that I've talked about a lot in this channel, combined with these 6 pre-market levels, and leave about a week worth of levels in place, just to make sure, because especially when we're trading within the same range for a decent period of time, it can give us a good indication of where we'll be bouncing around between where we'll hold. And then of course, if you're not already aware, I recommend following me on Twitter. If we go back to today, one thing that was really interesting, if we scroll down here is that we saw light dealer participation, but we saw from both a Vanna and Gamma perspective that SPX 3850 would likely be the high of the day, which it was. And then what was even more interesting was the low of the day, where we had this major level at on SPY at 380 and 50 cents right here, which actually was a major signature print from days prior that's still holding place. There's a lot of buyers down there. We could see it here again, 380.51. It shows as that ended up being the low of the day, and that was from SPY. So it was a combination of Gamma and dark pools that set our boundaries. But then, of course, even if you have a feeling of what those boundaries might be, it's important to know how to trade within that. And that's where these pre-market levels can help significantly when paired with order blocks as well. And if you're using smart money concepts, you're using an indicator like Sonar Labs or the one I made or the free Lux Algo one, doesn't really matter. Those will also mark previous day high and low and week for you, so you don't have to mark those. But one thing they don't mark are these pre-market levels, and these are significant, and we see nice reactions throughout the day that can lead to some fantastic trade setups. So anyway, I hope you found that helpful. That's all I have for today, and I will be back soon with another video, and I appreciate you watching.